Welcome everyone to the CFO Swinger Watch newsletter's technical analysis video for the week of June 17th through 21st. Now, before I begin, make sure you guys are always reading the report first before you watch this technical analysis video. Remember, I have way more details on what our actual swing trade ideas entail for every single week. For example, I provide the exact option contracts that we need to be looking to execute for each swing trade idea and the exact 3-point game plan for each swing trade idea using equity. Now, that's just a small snippet of what the weekly report says, so make sure you guys are not only watching the technical analysis videos. With that, let's take a look at the markets. So, as you guys should all know by now, largely due to the CPI report from May, last Wednesday we had a nice big gap up that led into a new all-time high number of $544.12. So yet again, congrats to all of our long-term investors. Now, as you guys remember, we had CPI for the month of May coming out on Wednesday, along with the results of the Federal Reserve's FOMC meeting. So we had the rate decision, and on top of that, we had the news conference from Jerome Powell. Now, I've gave a pretty succinct but detailed summary of what Jerome Powell said in his news conference, and I gave a little bit of my own thoughts and opinions as well. And I gave all that in last week's Hump Day market recap video. So make sure you guys go back to that on my channel and watch it. But if you guys want to make it easy for yourselves, I will provide a link down below in the description box. Now, thanks to this nice pump up higher last Wednesday, we also got a pretty good consolidation where we saw a very good support coming in at 540. This whole number level at 540. And if I go lower on the time frames, so let's take a look at the 2-hour, my favorite intraday hourly time frame. We have seen the bulls really just trying to hold this 540 level, and they have succeeded. And in fact, thanks to these bulls here, these buyers holding this level at 540, we have now find ourselves in a nice descending resistance trend line, where on Friday we had a nice close with a small pop right over this descending resistance trend line. Now we are also trending on top of the 2-hour 10 SMA, and I love to see the price staying over both of my short-term SMAs on every single intraday time frame. Now, if I go back in the daily time frame, that's also the same story, where the price continues to stay over the daily 10 and the daily 21 SMAs, and the buyers continue to defend both of these two short-term momentum SMAs. And so this consolidation so far, as we're continuously building a support at 540, can provide some very good time for my daily 10 and my daily 21 SMAs to catch up, but most importantly, the daily 10 SMA, because it usually provides a lot of good short-term support and buying momentum to allow the price to continue to ride up higher. And so I go a lot more detail into this short week, especially with the holiday and the fact that we have the monthly OPEX this Friday coming up. And so make sure you guys read the market summary. All right, I gave you guys a bunch of details as to what we should be expecting this week as we head into the monthly expiration. But the general kind of summation of my thoughts and analysis is that we should head higher as we head into the monthly OPEX. And so I would most likely be looking for at least a 546 retest if you do break out of that descending resistance trend line that I just showed you guys on this 2-hour time frame. All right, now before I move on to the small caps, okay, IWM, we also need to raise our demand area here because it seems like the upper range has been lifted due to, or largely due to, the fact that the past few trading days, so before Wednesday's big gap up, we also formed a new level of support at 532.50. And what's pretty amazing about this level is that it was also very close to the previous all-time high print on this day on May 23rd, which was 533.07. So this 532.50 level, this whole number level, is now our new upper range resistance level for this nice big and wide demand area. And if you guys forgot what that demand area was, well, we had that lower range support at 524 and then that upper range resistance at 532, but we had to raise it another 50 cents because we have this now new support level at 532.50. So what this means is that the if the price decides to reverse from, you know, in the short term to midterm future, we should be expecting to see some very good buying and support coming back into 532.50. But if you don't see that, and if you lose this new support level that we've just made, then this entire demand area can become a heavy area of supply, and we can see a lot of sellers coming back in, and most likely the sellers that were present when we made that new all-time high print on this day of May 23rd. All right, now with that in mind, let's take a look at IWM. So the laggards of the laggards, right? The king of laggards is the Russell 2000, and they keep on breaking hearts. However, you know, obviously we are also in a long position in IWM, but however, again, if we take a look at the longer time frame, so let me just take out my technical analysis here, okay? Everything still points towards a nice big move, a potential breakout to the upside. And if you guys are getting scared at the, you know, the very short to mid-term moves like we just saw last week, or even just last week, or even the previous weeks before that as well here, as you guys can see all these previous 4 weekly candlesticks that are red, and also back-to-back consecutive red weekly candlesticks, you know, you guys shouldn't be so focused on the short to mid-term because, as I've mentioned plenty of times, the price continues to stay over the weekly 50, my dark blue line here, and 200, my yellow line here, SMAs. And these are very, very important SMAs in the longer term, especially when we're looking at a higher time frame like the weekly time frame. And again, I've also cautioned to you guys that there is a slight possibility that we can see a retest of this weekly 200 SMA. And if that does occur, you know, I would love to add more into that long-term position. I wouldn't be, you know, too happy that the price went back down to the daily 200, but the weekly 200. But that will also provide us with a nice buying opportunity, or a nice averaging down opportunity for our long-term positions. Now, as long as we do not lose the weekly 200, then we can continue to see a nice pivot from this weekly 200, which we've been doing the past couple of months, and even back in, I believe, the early December of last year, then we should be good, right? I mean, you got to keep it simple like that. Now, if we do see that retest of the weekly 200, then we should also see the weekly 50 SMA finally starting to curl up higher pretty rapidly at that point, and finally give us that nice move over the weekly 200 SMA, and officially giving us what we like to call the golden cross. All right, so we had our first death cross, which is the complete opposite of a golden cross, occurring back in mid March. And so it will be a nice change of tune, a nice change of sentiment from the longer term perspective for such a huge laggard market cap if we do see a nice golden cross of the weekly 50 SMA moving over the weekly 200 SMA, and it will also provide a lot more conviction for the long-term bulls on all of these laggards, especially the small caps. Okay, so for IWM here, again, I am looking at this from a longer term perspective, and to really just put it in a very short, succinct way, if we lose the weekly 200 SMA with heavy selling volume, well, that's it, right? I just have to get out the position. Right, now if I go back on the daily time frame, okay, we're still pretty much in range here, because again, we have a very nice demand area from 198 to 200, and now I've set this area multiple times earlier this year as well, and I mentioned it years ago, right? I mentioned it, I believe I mentioned it back in 2022 as well. Yeah, so right around here, okay, I was talking about the fact that we have this psychological level of $200, but if you guys want to see a nice area of supply, since that's exactly where we're continuously rejecting off of this psychological $200 level, then we need to be looking at 198 to 200. And from late, well, I would say mid to late 2022 to most, if not all of 2023, well, not all, but most, we saw the price rejecting from this 200 to 198 supply area. And you guys can see that at these designated spots that are indicated by my red arrows. Okay, and so this $198 to $200 area continues to be respected, especially last Friday. Now, yes, I am concerned about the increase in volume, but that also means that we're about to see an increase in volatility as well, which we also saw in the last 3 trading days of last week. Okay, so again, I'm just taking this step by step from a longer term perspective, and my full out should be below the weekly 200 SMA. And the reason why I said should is that, well, the weekly 200 SMA is continuously rising to meet up with the price on the weekly time frame, and you know that means that I really don't know where will the 200 SMA be by the time the price comes back down to it, and if it does come back down to it. But for now, just know that the weekly 200 has closed at 195 last week. Okay, so now all the targets remain the same to the upside for IWM, so make sure you guys look at my chart here and put it on your own IWM higher time frame charts. Right, so now let's take a look at our first swing trade idea for this week, Tesla. Right, so Tesla has been crushing all the dreams and, well, hopes and dreams, not just dreams, for a lot of shareholders and a lot of bullish traders last week, because after that initial news came out that the compensation plan for the CEO, Elon Musk, was approved by shareholders, we had a massive gap up into a major level of resistance. And so if you guys are following me on my socials, especially on Twitter, I posted about Tesla right before we had that nice big jump overnight, but I told everyone that there is a resistance at 187.50, which can become our first target if we can break over this major level of resistance at 180. And again, we've been looking at this upper level of resistance when we saw that we had a nice consolidation, very tight consolidation forming between this range of 174 as the lower range support level and the upper range resistance level of 180. And so overnight we saw that nice pop over 180, and then we hit that first target of 187.50 overnight as well, and then we popped even more as we went over this 187.50 level. However, it seemed like based on the price action that we saw on Thursday, that was kind of too much of a rapid move, right? And so what happened was that the price digested the news and we saw a nice pullback, and then on Friday we confirmed that even more by pulling back even more. And the only thing that I really liked about Friday's price action was that we were able to hold over the daily 10, my red line here again, and my daily 21 SMAs, which is my light blue line over here. And so with this in mind, okay, now that we're back down below this 180 resistance level, there is a slight probable chance that we can see a retest of this lower range support level at 174, and that could potentially be the last retest and the last flush of quote-unquote weak buyers before we see a nice sharp move, or even just a very, very sneaky move to the upside. And the reason why I say sneaky is that if we do see a retest of 174, that will probably be for a lot of people, the last straw to be bullish. And that means there could possibly be a very small group of investors and traders who are left bullish, and they might just be the only ones left to witness this potential pivot back to the upside, a break over 180, and then a nice shot upwards towards that psychological level of $200 that I've talked about frequently about Tesla in the past, right? I've talked about it multiple times, so hopefully you guys remember that. But anyways, that's exactly what I mean by a sneaky move to the upside, right? Where only a small group, handful of traders and investors are able to experience and hold on to the positions as the price rockets up higher, while the majority are just left in the dust, right? So that is exactly what my plan is here, right? We want to be longing Tesla over 180, right? Because again, I don't know if we're able to even retest 174. Who knows? Maybe we see that tomorrow. But if we do see a retest of 174, I want you guys to be patient until we are able to pivot from 174 and retest 180. And now, why do I say that? Well, we also have to consider the current market conditions. As I've repeatedly said last week, the market breadth wasn't too inspiring for such a massive rally to all-time highs in the overall markets, and so we need to be cautious. However, okay, the market should be able to continue up higher, but if you continue to see breadth weakening and just overall just a lot of names not being able to follow up with the markets, leaders, especially the mega caps, or just overall the tech growth names like Tesla, will struggle with the market. And so Tesla, we need to make sure we see an actual confirmed breakout over 180 before we're able to find ourselves in a long position. Okay, and so again, I gave you guys all the 3-point game plans for Tesla and all the option contracts that we need to be looking at for this name if we do need to execute once we see an entry point over 180.10 on the newsletter itself and the entire report. So make sure you guys read the report. And last but not least, we have our second swing trade idea. So CFLT. So I'm going to go over this pretty quickly here because, well, it's a very clear swing trade idea, right? So first of all, we're making a very nice descending channel on the daily time frame. And very recently, last week, we reached the swing lows of this descending channel, and this happened to be our second retest of this descending support trend line. And that means that we should be able to see a third retest of this descending resistance trend line. And why is it a third? Well, we have our first retest here. Okay, make that a bit more accurate. And then our second retest over in this general area. All right, and so let me also mark this as well. So basically we have our swing highs and swing lows during this formation of a descending channel. And so last Wednesday, we had a nice push up higher and break over this tiny base that we formed here from 25.50 to around 26.50, so a perfect $1 difference, and we're able to break over 26.50 with some pretty good volume, and then we started to really just tighten up and consolidate fairly well in my eyes, as we saw a very nice stair-stepping down in the volume as well, which is textbook. And so if you take a look at the intraday time frame on my 2-hour, okay, this specific tight consolidation has led into an intraday bull flag, right, or bull flag pennant, right? So we have yet again a micro bullish chart pattern on top of the macro daily descending channel chart pattern. And so basically we have two complementary chart patterns giving us a complementing bullish signal from the intraday to the daily time frames. And we always like to see complementing technical signals. So this CFLT should be able to have a nice breakout from this 2-hour bullish pennant if it's able to break over this descending resistance trend line and also overtake the flat horizontal resistance level at $28. And that is the reason why, if you go back on the daily time frame, the CFLT long entry point is 28.20. And on top of that, that is also over the previous high of the day, which was at 28.00. So that was the Friday's high of the day. Now, to add even more bullish signals for this name for this week, if you take a look at this consolidation, we're sitting over the daily 200 SMA while the daily 10 SMA is starting to curl up to catch up to the price. And on top of that, do you see I'm layering all of these bullish technical signals here? We have two inside candlesticks back to back. So the first inside candlestick was right here compared to the range that we made on the breakout day. And then on Friday, we had another inside candlestick that was even tighter compared to the previous inside candlestick. So this one is ready to potentially squeeze maybe even tomorrow morning. So make sure you guys have your alerts set up at $28 so that we can potentially execute once the price moves over 28.20. Now, lastly, I want to take a look at the weekly time frame. Why? Well, from a longer term perspective, CFLT can potentially become a very, very nice long-term investment because we have a massive macro base that now spans 2 years. And this macro flat base has a lower range support level of 16.65-ish and a massive upper range resistance level at $38. And so if we're able to break out of this daily descending channel chart pattern, then we can potentially retest $38 yet again and have an attempt of trying to break out of this massive 2-year base and possibly get back to the highs that we saw during its IPO days. And so if you guys are looking at this $38 level, take note of the fact that this $38 level was also the IPO all-time lows, well, during this period, the lows during the IPO period. And so this will be a very significant level to break out of for the long-term buyers. All right, so that is it for this video. If this technical analysis video was very insightful, make sure you guys smash that like button down below. And if you aren't subscribed yet, make sure you guys hit that subscribe button. But most importantly, hit that notification bell as well so that you guys are notified whenever I am live on Tuesdays and Thursdays or when I do upload a new video. All right, good luck and I'll see you all tomorrow morning.